Welcome back to Explain the Charts. Today we're analyzing the NZDUSD currency pair, diving into the latest market news and events, then shifting to a technical analysis of the charts to identify potential trading opportunities. Recent Google searches reveal a strong focus on the potential for the NZ dollar to rise, fueled by optimism surrounding a potential US-China trade deal and a 12 trillion yen Chinese stimulus package, both events that could potentially benefit the New Zealand economy. This optimism, however, is tempered by concerns about aggressive RBNZ rate cuts and a potential US-China trade war, creating a complex environment for the Kiwi. Looking at the daily chart, we can observe a clear downward trend over the past month, with the NZDUSD pair currently trading near its 3-month low. This decline is likely driven by the persistent strength of the US dollar, reinforced by Trump trade optimism and rising US bond yields. Notice the recent price action, particularly over the past week, where the NZDUSD pair attempted to bounce back above the 0.6000 level but ultimately failed. This suggests strong resistance at this level, likely due to the aforementioned bearish factors. Let's narrow our focus and examine the 1-hour chart to gain a more granular understanding of the recent price action. The 1-hour chart provides a more detailed view of the NZDUSD pair's struggle to break through the 0.6000 resistance. We can see a series of unsuccessful attempts to push higher, further reinforcing the bearish sentiment. There's a noticeable consolidation pattern forming on the 1-hour chart, suggesting that the market is currently in a state of indecision. This could be a sign of a potential reversal, but we need further confirmation. It's important to remember that the news events discussed earlier have a significant impact on the overall market sentiment, which in turn affects the price movements of the NZDUSD pair. Moving back to the daily chart, let's identify some key support and resistance levels that could influence the pair's trajectory. The 0.6000 level, as we've discussed, represents a strong resistance level, while the 0.5850 level could act as a key support level. If the NZDUSD pair manages to break through the 0.6000 resistance, it could signal a shift in sentiment towards bullishness. Conversely, a breach of the 0.5850 support level would likely strengthen the bearish outlook and potentially trigger further declines. Now, let's zoom in on the 15-minute chart to examine the recent price fluctuations and identify any potential short-term trading opportunities. The 15-minute chart offers a more dynamic perspective on the NZDUSD pair's price action. We can see a series of short-term fluctuations, potentially indicating a battle between buyers and sellers. There's a noticeable increase in volume during recent price spikes, suggesting that traders are actively participating in these movements. However, without a clear trend emerging, it's challenging to identify reliable short-term entry points. It's crucial to note that the 15-minute chart reflects short-term price fluctuations and might not necessarily provide a reliable indication of the long-term trend. Returning to the 1-hour chart, let's analyze the recent consolidation pattern and determine if it's a sign of a potential reversal. The consolidation pattern, characterized by a range-bound price movement, is still relatively young and lacks a strong signal for a definitive reversal. However, it's worth noting that the RSI indicator is currently hovering around the 50 level, indicating neutral momentum. If the NZDUSD pair manages to break above the consolidation range and close above the 0.6000 resistance level, it could be a strong indication of a bullish reversal. Conversely, a break below the consolidation range and a close below the 0.5850 support level would signal a continuation of the bearish trend and potentially trigger further declines. To further enhance our analysis, let's examine the 1-hour chart over a specific time frame, focusing on the past 24 hours. The 1-hour chart over the past 24 hours reveals a tight trading range between 0.5970 and 0.5990. This suggests a lack of decisive direction, with buyers and sellers seemingly locked in a tug-of-war. The RSI indicator remains in the neutral zone, confirming the absence of strong momentum in either direction. This further reinforces the indecision currently present in the market. To gain a broader perspective, let's transition back to the daily chart and analyze the potential impact of future news events. Upcoming economic data releases, such as the U.S. Producer Price Index, PPI, and jobless claims, could influence market sentiment and potentially trigger fluctuations in the NZDUSD pair. These events, however, are likely to have a limited impact on the long-term trend. The overall market sentiment is currently characterized by uncertainty, with the U.S. election outcome and global economic conditions remaining significant factors influencing the NZDUSD pair. To recap, the NZDUSD pair is currently facing a bearish outlook, trading near its 3-month low. Key resistance is at 0.6000, while key support is at 0.5850. A break above 0.6000 could signal a bullish reversal, while a break below 0.5850 would likely reinforce the bearish sentiment and potentially trigger further declines. It's crucial to monitor the news events closely, as they can significantly impact the NZDUSD pair's price action. Specifically, pay attention to the U.S. election outcome, global economic conditions, and the RBNZ rate cuts. Remember, this analysis is based on the current market conditions and could change as new information emerges. Therefore, it's essential to conduct your own research and due diligence before making any trading decisions.